All right, welcome back everybody to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin. In today's video, I want to share with you the latest news involving Synthetix, involving Basic Attention Token, involving Cardano, as well as a major warning to NFT altcoin investors. So like always, check the timestamps down below in the video description, and let's start with Bitcoin. Jesse Powell, CEO of Kraken, one of the largest cryptocurrency exchanges in the world, was just on a podcast that I like, H3H3 podcast, speaking about cryptocurrency in 2021, NFTs, Ethereum, and of course, Bitcoin. In this clip, listen to the hosts reawaken and realize, hey, Bitcoin is still here from 4 years ago. And then the surprise in their voices when Jesse says, yeah, it'll be here 4 or 5 years from now, and it's got more upside. Watch this.
You know, I remember it was like a few years ago where everyone thought Bitcoin like topped out at like 7,000. Everyone's like, oh, it's over. Yeah. I had friends who were like super invested, and they're like, I'm out, I'm selling, you know, the bubble's over. So yeah, you need diamond hands for sure to hold.
Yeah, but it's still early. It's still
you
early.
Think so?
You still think so?
You really think it's still early?
I think so. I think Bitcoin is going to be $500,000.
Oh, wow. Stop it!
Within the next few years.
Huh.
Yeah, well, look at how much money printing is going on. Yeah, so easily.
Okay,
easily, we're going to get to $1 million in Bitcoin.
If we don't have any, you would recommend to get some.
Okay, what do you think? Leave a like, leave a comment, and realize conversations like this are happening all across the globe right now in boardrooms, around average kitchen tables, people realizing that, hey, this thing doesn't seem to be going away. And if you think about it, because the Fed has made clear that they will print endless amounts of money, Bitcoin can actually only go up versus the US dollar.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.
Is the Fed just going to print money?
That's literally what Congress has told us to do. That's the authority that they've given us.
Okay, what a time to be alive. And Bitcoin, like gold, is one of the very few things in existence that governments, people, nobody can print more of. Bitcoin is a non-sovereign, hard-capped supply, global, immutable, decentralized, digital store of value. But let's keep going. First piece of major altcoin news you should know, Synthetix has more than 4x total value locked than the rest of the top 10 derivative protocols combined. So Synthetix is very much leading the charge right now in terms of derivative protocols, and we can see it's Synthetix, followed by Nexus Mutual, followed by Hedgic. All of these are on the Ethereum blockchain, and Synthetix has over $2.3 billion TVL. The rest, 300 million, 77 million. So this is a big fundamental green flag metric to be bullish on Synthetix. And this brings up a good point about not just Synthetix, but about the space in general. Because a friend asked me the other day, Austin, if we're seeing so much bullish news about Ethereum, so much awareness from NFTs, from DeFi, why isn't the price moving? And first off, we're very much up from where we were at the beginning of this year, 2021, up over 100%. But yeah, the last 4-6 weeks, we have been consolidating around this price point. But the price isn't the news today. Fundamentals like this right now, that's the news. And it reminds me of very similar conversations people were having about Bitcoin, when Bitcoin, for months, almost for years, were trending around between the $6,000 and $12,000 price point. For months, we were consolidating for months, yet the fundamental metrics were getting more bullish. Like this now infamous clip from investor Mark Yusko from years ago.
Quickly, before we go, Bitcoin was under 8,000 earlier today.
Buy it.
Regardless, though, of the drop. If I said to you Bitcoin dropped to 5,000, you'd say buy it.
Buy it. Because here's the thing. The daily price of Bitcoin doesn't matter. Every fundamental indicator of Bitcoin, usage, wallets, block size, transaction size, number of transactions, every single one, hash rate, making new highs. All of the indicators of the network and the network value are rising. The price of any asset fluctuates. Let's take Amazon. Amazon's been a public company for 20 years. In every year, including this year, it's at a double-digit drawdown. The average peak to trough, minus 31%. Twice, minus 90%. When was the right time to sell? Never. Who's owned it since the IPO to today? Jeff and his mom and dad. That's it.
All right. We're going to leave it there, Mark.
All right,
Good to
thanks.
see you.
Thanks
Thank
for
you,
having me.
Mark
Great to be
Yusko,
with
Morgan
you.
Creek Capital.
Outcast.
So funny. Who's got the last laugh now? Comment your thoughts down below. But the takeaway here is for you. If you're looking for the coins that probably have potential to pop, look at the coins where fundamentally the metrics are getting stronger. I will keep looking. As I get more information, I will keep you updated. And next piece of quick news for Cardano. The Cardano Ecosystem posted by Charles a few days ago. I will link this down below if you kind of want to dissect each of the different pillars of this Cardano ecosystem yourself. Nothing really specific to point out here, other than it's cool to see because these sort of visuals are very common in the Ethereum ecosystem, becoming way more common in the Polkadot ecosystem. Let's keep tabs on this, and over the next few months, let's continue to watch and see how this ecosystem develops. And next piece of quick news for Basic Attention Token. As you may or may not remember, Brave Browser will be integrating some DeFi lending and borrowing features into their platform, and Stormy Daniels was obviously paid to promote this somehow. Watch this. I can't stop laughing.
Oh, Bat Brigade. Oh, God. Oh, wow. Brave is now DeFi? It's the next chain link. I just love the browser already. But damn, if BAT can now be farmed and staked, it's a straight road to the sweet, juicy moon. Basic Attention Token got my attention. Wow.
Wow. Great acting. Great acting. You know, what do you say about this? Interesting times. Interesting times. Next piece of news for Coinbase. Coinbase to go public now next month. This is a month later than expected. They're pushing it back. Coinbase, major US crypto exchange, most recently valued at $68 billion, will go public a month later than widely expected, as its plans to expedite the process have slipped, according to multiple anonymous sources cited by Bloomberg. No official reason for this delay was given, other than plans have now changed. I think it has a lot to do with this next piece of news. Coinbase has just settled with the CFTC for $6.5 million over old trading practices. So they're going to pay the $6.5 million fine to settle allegations that it self-traded cryptocurrencies between 2015 and 2018. So they were accused of self-trading, i.e. wash trading, i.e. when one individual or one company is on both sides of the trade, the buying and the selling, and they chose to settle with the CFTC and kind of put this behind them. According to a consent order published by the commodities regulator Friday, Coinbase self-traded a small amount of cryptocurrency between 2015 and 2018 through 2 of its trading programs. So what type of trading program did they self-trade through? One of these programs was designed to project how much of any given cryptocurrency Coinbase was expected to sell on its retail brokerage app. Now, the system would then purchase the suggested amount of cryptocurrency through its professional trading division, GDAX, which is now known as Coinbase Pro, and hold it in the exchange's treasury. Very fishy. So they were projecting how much they were expected to sell, and they themselves then bought it and then just held it on Coinbase Pro. Give me your thoughts on this. It appears that the CFTC and themselves are both claiming that this was unintentional. Importantly, the CFTC is not alleging that any Coinbase customers were harmed or that any wrongdoing occurred. Rather, it's describing the activity as reckless but not intentional, and this activity is no longer occurring, the CFTC said Friday. Either way, I guess this was happening in some small sense back between 2015 and 2018, and now that they're going public, everything is coming to the forefront. I'll keep you updated. Either way, they will be doing a direct listing on the NASDAQ. Now it appears at the end of April. I want to give a quick shout out to our sponsor, Blockfi. Blockfi is providing traditional banking services to cryptocurrency investors. So if you have Bitcoin, if you have Ethereum, if you have Litecoin, or a vast array of stablecoins, you can put it in interest-bearing accounts and earn some passive interest. Put your cryptocurrency to work, earn up to 8.6% APY with a BlockFi interest account. And right now, if you sign up with our link, blockfi.com/altcoindaily, down below, you can get up to a $250 crypto bonus with a deposit of $25 or more in crypto. Also, if you ever need USD immediately, they do offer crypto-backed loans. Basically, by using your crypto as collateral, you can access that liquidity without selling and unlock up to 50% of the value of such assets in USD. Very transparent interest rates, no hidden fees, and of course, it's backed by some of the biggest names in custody in the space. So if you're looking to earn interest, BlockFi is a solid option. Use our link down below. Check it out. Speaking of regulation, and next piece of news, a little warning to NFT altcoin investors. Financial watchdogs have DeFi in their sights, apparently, and have altered wording around non-fungible tokens. So this is the FATF, Financial Action Task Force guidance, makes a careful change in terminology, which appears to nod in the direction of NFTs. Check this out. This was released on Friday by the Financial Action Task Force, which is, of course, a global anti-money laundering body. So I think you can see where this is going. They don't want people to launder money with their NFTs. A specific reference to assets that are fungible, which now has important implications in light of the current non-fungible tokens craze, has been replaced by assets that are convertible and interchangeable. So they're now including NFTs in the regulation, and blockchain analytics firm CipherTrace summarized key points of the new guidance and concluded some non-fungible tokens may not initially appear to constitute virtual assets, may in fact be virtual assets due to secondary markets that enable the transfer or exchange of value or facilitate money laundering, terroristic financing, and proliferation financing. Okay, give me your thoughts on this. Again, for you, in my opinion, there's nothing to worry about other than I think we're going to start to see high net worth individuals maybe use digital art for money laundering. I mean, after all, they do it with traditional art all the time. This would be nothing new. But either way, if you hold non-fungible tokens, I will keep you updated. And that is the video. My name's Austin. See you tomorrow.